Welcome to 2020 and to our first episode of the year. A little over a year ago, the Digital Asset Working Group was created by the American Institute of CPAs to develop accounting and auditing guidance on digital assets. We just issued our very first version of the free practice aid, which will be updated with additional content throughout 2020. Some of the key topics that we'll be discussing include: what are digital assets? What are some key points in the practice aid? What are some potential future topics? And how does someone even get started in the digital asset space? This episode is all about accounting for and auditing of digital assets, so we'll answer those questions and more in our conversation with two of my favorite people, the co-chairs of the Digital Asset Working Group, Matt Schell, a partner with Crowe, and Amy Steele, a partner with Deloitte. Welcome to the Go Beyond Disruption podcast, brought to you by the Association of International Certified Professional Accountants, the unified voice of the AICPA and CIMA. I'm Krupica, lead manager in the Emerging Assurance Technology area, and I'm based in the AICPA and CIMA office in Durham, North Carolina. Every week, we share insight from inside the accounting and finance profession that helps you stay ahead of the curve, whatever business you're in. This week's episode is called Digital Assets, What Your Practice Needs to Know. And we're talking to Matt Schell and Amy Steele about digital assets, what they are, how to account for them, and potential challenges that are unique to the digital asset space. Before we go ahead and get started, how about we get a bit of background from both of you? Matt, we'll start with you. First, where are you talking to us from, and what is your background in the digital asset space?
Sure. As you mentioned, I'm a partner with Crowe in our national office in Washington, D.C. I'm involved in digital assets in a number of ways. Probably first and foremost is I kind of work on a lot of the emerging technology and strategy items for Crowe's national office. And in that, I am a co-chair with Amy on the Digital Assets Working Group, which is for the AICPA, and then a member of the Center for Audit Quality, the CAQ's Emerging Technology Task Force.
Hi, Di. This is Amy Steele. It is a pleasure to be on this podcast with you and Matt. I am a partner at Deloitte. I'm based in the New York City area in the national office of Deloitte. I focus on strategic priorities as well as serve clients primarily in the technology industry. Similar to Matt, I focus a lot of my time on emerging topics, including blockchain and digital assets, and how these topics will impact financial reporting and the audit profession. Similar to Matt, I co-chair the AICPA Digital Asset Working Group, and I serve on the Center for Audit Quality's Emerging Technologies Task Force.
Well, it's so great to be able to talk to both of you about the digital asset space and this practice aid we're developing. But before we go ahead and dive into the discussion about what guidance is in the practice aid, I wanted to take a step back and ask Amy a couple of questions to gain some background. Why is the topic of digital assets so important right now? And why did we put together this working group to develop the practice aid?
So we are seeing blockchain use cases in all industries, in most jurisdictions worldwide. We're seeing the combinations of blockchain with artificial intelligence and other emerging technologies, and we're really seeing an embracing of this technology and an increase of investment dollars and an understanding that it's real, which has resulted in a broad range of use cases and types of digital assets out there. To date, there isn't much guidance as it relates to auditing and accounting for digital assets, and the AICPA received feedback that practitioners were looking for auditing and accounting guidance as it relates to digital assets. So this prompted the AICPA to form the Digital Assets Working Group. The mission of the working group is to develop accounting and auditing considerations and guidance for preparers and for auditors. The working group is divided into two subgroups to focus on auditing and accounting topics, which is co-chaired by Matt and myself. We identified working group members that are subject matter experts from international and national firms. And our output of the working group is an evolving practice aid that we're going to focus on discussing today. It's guidance that discusses the unique challenges and considerations from both an audit and accounting perspective. Where the task force has divergent points of view, we're going to list out factors to consider and provide a framework to really help the profession and the preparers understand how to both account for and audit in this unique space. As we got started with our working group, we really sat down to think about what are the guiding principles to this output. And we focused on a few key guiding principles. First, we're focused on US GAAP for the accounting subgroup. For audit, we're focused on US GAAP. For audit, we're only focusing on financial statement audits. At this point, we're not looking toward other forms of assurance. We're looking at various participants in the ecosystem to the extent possible. So holders of these digital assets, exchanges, custodians, miners, funds that invest in the digital assets. And we're focusing on what is unique for the space when applying current US GAAP and current US GAAP to providing guidance on application.
Definitely seems like a crucial time to get guidance out to the professionals. Definitely a lot going on. Before we go ahead and move on, let's just talk about the asset class itself. Matt, what are digital assets? Could you give us your thoughts on what's going on out there related to them and the prevalent usage or any general observations that you might have?
Sure. Let me just kind of level set with a couple of terms first. You mentioned digital asset, Di, and digital asset is a very broad term representing digital records made kind of using cryptography for verification and security purposes on a distributed ledger or blockchain. Distributed ledger being like a shared subsidiary ledger or subledger amongst a number of kind of participants on that blockchain. And blockchain is, for those that aren't familiar, is really the underlying technology that drives that. And when I think about digital assets, there's a lot of different subsets of digital assets. One of them that we cover in the paper is crypto assets. And we define those very similar to what you see for the IFRIC agenda decision wording. Basically, those crypto assets are ones that function as a medium of exchange, and they have a number of characteristics. Specifically, they're not issued by a jurisdictional authority. For example, they're not sovereign-backed or sovereign government-backed. They don't give rise to a contract between a holder and another party. They're not considered a security under this federal securities law of the Securities Act of 1933 or the 1934 Act. And so examples of that subset of crypto assets meeting those characteristics might be like Bitcoin or Bitcoin Cash or Ether. As I mentioned, crypto assets are just one of the myriad of applications that you might see for digital assets. And, we'll talk about this more, but probably the most prevalent use case. And digital assets is really the term that we're going to use broadly today, and that includes any number of subsets of digital assets. As I mentioned, probably the most prevalent use case people are familiar with is the Bitcoin, Ether, and Bitcoin Cash examples. However, some of the trends that we're seeing more recently tend to focus on using blockchain technology in kind of what I would call a traditional or a non-traditional way. The more traditional way might be including issuing a security or doing a securitization on, using some kind of blockchain technology or a blockchain distributed ledger. The non-traditional way might be issuing some kind of digital asset that's backed by various other assets. A lot of industry terms are used to describe these, such as stable coins that might be collateralized or redeemable for assets such as US dollars, a specific commodity, another crypto asset, or a combination or combinations of the different assets. Lastly, we've also started to see, as Amy mentioned, some experimentation, with different types of applications of this technology. We're seeing fractionalization of ownership for specific types of assets on a blockchain.
Based on what you just said, it definitely seems like obviously there's a lot of different uses related to digital assets. And coupled with that, this digital asset space seems to be changing from a regulatory technology compliance standpoint on a frequent basis. Amy, I know that the first version of our practice aids covers some accounting topics, not all of them. But before we get into the specifics and have Matt talk about that, let's just talk about the scope. And I know you covered a little bit of the scope, but could you expand on the scope a little bit more of the practice aid from both an accounting and auditing viewpoint, including how are we dealing with this changing environment?
Sure, happy to. So the practice aid covers U.S. non-governmental entities who follow U.S. GAAP. Similarly, the audit content will follow the framework set out in U.S. GAAP. The guidance is based on interpretations of existing professional literature and the experience of the members of the working group and represents the views of the working group and the AICPA staff. So the working group is not standard setting. We're not interpreting regulations outside of U.S. GAAP and U.S. GAAP. And it's important for preparers and auditors to consider those requirements and how they may apply to a particular digital asset. For our international audience, while we are focused on U.S. GAAP and U.S. GAS, the content is intended to be helpful in other jurisdictions, and preparers and auditors may want to consider this guidance under the umbrella of their own jurisdictional requirements. While different regulators are focused on different things, global best practices are helpful for all. The guidance is intended for financial statement preparers and auditors that have a fundamental knowledge of blockchain technology. It is meant to address the more pressing issues in the space. But that said, it's not going to address everything. Digital assets and the associated underlying technology are an evolving area, and the expectations and experiences of stakeholders such as preparers, auditors, and regulations may change accordingly. Therefore, the questions, the examples, the challenges, risks, considerations, and potential procedures that we have included in the practice aid are not exhaustive and continue to evolve. We did make a decision as a working group to roll out the topics as quickly as they are finalized, so that we can increase the speed to the market. And we understand that the market's changing and the document is going to be fluid and it will evolve as the marketplace continues to evolve.
Content will certainly be added to the practice aid as we go along, and good information about the scope of what we're looking at. So thanks for that. And now that we have some background on the actual digital assets as well as the digital asset working group and why it was formed and how it was formed, let's go ahead and switch over to talk about some specifics of our practice aid. We are super excited about the release of version 1, which represents a ton of hard work from all of our working group members. Matt, what are some broad topics it covers?
As you mentioned, the document's available online, and it's really focused in the first batch on entities that are not applying any specialized industry guidance. So by that, they're not currently an investment company or applying broker-dealer accounting. The Q&As are focused on classification and measurement guidance when an entity purchases crypto assets. So I defined those earlier, and the definition, as I mentioned, would really include things like Bitcoin, Bitcoin Cash, and Ether. And in that question, we focus on providing guidance for generally applying the intangibles guidance in U.S. GAAP. The next several questions focus on recognition and initial measurement and derecognition and measurement issues associated with digital assets that are classified as indefinite-lived intangible assets. And so by that, we're having a very similar scope to the types of items that would have been in the first question. The last question that we have in the Q&A is really focused on determining ownership or recognition of digital assets broadly, not just crypto assets or digital assets that are defined indefinite-lived intangible assets. And in that, we provide a list of factors for an entity to consider to try to determine when that entity is holding its digital assets using a third-party hosted wallet service to determine ownership and if they should recognize the digital asset or right to receive the digital asset.
One of those topics that you were talking about was dealing with the accounting for holding of a digital asset. Could you expand a little bit and just give us some key things an entity should consider when determining the appropriate accounting for holding of a digital asset?
Sure. The first couple questions, basically questions 1 through 9, are focused on application of the intangibles model. And so I'd like to highlight first that it's critical to understand the definition of crypto assets and what we talk about meeting that criteria. And then second, it's important to understand that within the intangibles model for US GAAP, it is challenging to apply that model to crypto assets because it's not really an other than temporary impairment like concept in the intangibles model, meaning that you can have, and we do see significant volatility in the crypto asset space in terms of fair value, and impairments could occur with subsequent increases in the price happening shortly thereafter. But the accounting guidance would not allow you to consider the subsequent recoveries and write that asset back up.
We'll continue our conversation in a moment, finding out more about some of the challenges to be aware of when accounting for and auditing digital assets. All of that is coming up in this episode of the Go Beyond Disruption podcast, brought to you by the Association of International Certified Professional Accountants. You can find out more about this podcast and about the rest of our wider project at gobeyonddisruption.com. If you've just discovered this podcast, remember to subscribe via your podcast app and have a look at our older episodes as well. That's where you'll find a lot more on this topic and others. There's close to 100 conversations which focus on how technology is changing the profession, as well as how we as professionals are rising to the challenge and identifying opportunities and using our human intelligence to stay ahead of the curve. We're talking to Amy Steele of Deloitte and Matt Schell of Crowe about digital assets and our new practice aid that has been developed to help professionals that are considering operating in or already operating in the digital asset space. Amy, what are some challenges you see with respect to these digital assets overall?
Sure. There are many unique financial reporting and audit challenges associated with this asset class, but I'll focus on two broad categories. First, market risk, and second, ownership. The digital assets ecosystem is still in its infancy, and blockchain technology is rapidly evolving in such a way that many of the digital assets of today may become irrelevant, worthless, or experience significantly higher volatility than traditional asset classes. That, coupled with the lack of a deep history in these assets, could present challenges in identifying market manipulation and inaccurate pricing. The focus here is on valuation of this new asset class. We could see challenges with digital assets that are highly volatile and with digital assets that are less frequently traded. There are a lot of complexities here with identifying the appropriate valuation models for this new asset class. The second group of challenges relate to the ownership of these digital assets. And here we really focus on existence of these assets, the rights to these assets, and the safeguarding of assets. And I group these together because they have very similar challenges. Starting with existence. Existence is the assertion that the assets on the books exist. In the digital asset space, the underlying record of a digital asset transaction generally sits on the blockchain without any physical representation of that particular asset. And there may not be a third party to confirm the existence with. This all presents challenges as to, one, can we rely on the blockchain to prove the existence of a digital asset? And two, can we rely on a third-party custodian? As it relates to rights and obligations, this is the assertion that the entity owns or has rights to an asset that's on their books. In the digital asset space, generally, the ownership and rights to a digital asset is based on control of a private key. Challenges exist with proving out ownership and control of keys. There are methods that exist to address this, including transacting using the private key and performing other validation methods using cryptography. But this is all based on the type of digital asset, the type of the blockchain, and the key security that is used. Additionally, there may be challenges related to exclusive ownership and proving that the entity has the only key to the asset to prove they are the sole owner. Important considerations here are related to on-chain or off-chain activities. Are you self-custodying or using a service provider? And the importance of really evaluating any service auditor reports that exist and if those can be relied on for risks related to rights to assets. Pivoting to safeguarding of assets, this really takes an investor perspective to think about if an entity loses access to a private key or another party inappropriately assesses that private key, could the entity have lost control of the digital asset and hide that loss to mask a financial loss to the financial statements?
So market risk and ownership risk seem like they are certainly critical for all professionals who are entering this space to consider. Matt, do you have anything to add to that?
The last question, question 10, that we covered in the first batch of papers covers ownership and recognition from an accounting perspective. And I think I would just echo what Amy mentioned, that ownership is particularly challenging when you're thinking about trying to figure out if I can recognize the asset as my asset. Given all the myriad of different facts and circumstances that might apply, we've provided a list of factors that one might consider when they're trying to understand their specific facts and circumstances and determine if they own the digital asset or instead have a right to receive the digital asset. That list of facts and circumstances and kind of the factors to consider, obviously, our list is not all inclusive. There could be various jurisdictional nuances, whether you're talking state to state or country to country. But we wanted it to be helpful and intuitive for people that might be using a third-party hosted wallet provider or some kind of custodian to determine whether they have ownership of the asset or not specifically.
And as both of you know, there's been a lot of discussion in the digital asset working group members on these specific challenges you just talked about. And we are going to be working that into the practice aid as we continue evolving that document. As we are all eagerly anticipating version 2 of the practice aid, Amy, what is a likely auditing topic that may be included in the version 2 of the practice aid? And maybe include some information about some specific challenges on the topic as well?
Yes. The first topic we'll be putting out is acceptance and continuance. We're putting this out first, given the importance of acceptance and continuance procedures before ever taking on a new client, particularly in a new and unique ecosystem such as this, with very unique risks and skill sets needed. This topic will focus on understanding an entity's role in the digital assets ecosystem, as well as the entity's planned operations and strategy. This topic will also focus on the skill sets needed by management and auditors. It is absolutely prudent to evaluate if management has the appropriate skill sets to support the books and records, and if auditors have the appropriate skill sets to be able to audit in the space. As an example, audit teams may evolve to need more specialized skill sets beyond accounting than ever before, such as cryptographers and data scientists. This paper will really focus on the importance of understanding these skill sets and competencies needed to operate in this ecosystem, the importance of understanding risks associated with the underlying technology and the digital assets, the important considerations related to obtaining appropriate audit evidence to support the books and records, and a focus on the importance of taking care when deciding whether to operate in the space. As a working group, we wanted to message that overconfidence in the space is a real risk, and it's important to consider upfront if we have the skill sets to be able to audit in the space.
After all that you just talked about, I clearly see why it's the first topic being addressed and being developed. Matt, paint a broad picture of some of the potential other accounting topics coming in the future versions of the practice aid.
We're focused in the next batch. First, we want to provide some guidance for people that are applying specialized industry accounting. So we're looking at investment companies and broker-dealers and other entities like that have specialized industry accounting guidance in US GAAP, and figuring out how the accountings for those entities should work if they're holding these assets. We're also hoping to provide some guidance as it pertains to the determination of fair value, so the identification of your principal market. And once you've determined your principal market, how do you determine what your fair value is? What does GAAP have to say about the determination of fair value as it applies to the different types of assets and markets that we have for digital assets? Lastly, we're starting to look at some other categories or subsets. As I mentioned earlier, the first batch included guidance on crypto assets. We're hoping to provide some guidance on stablecoins, among other topics.
Those topics seem like some challenging areas to tackle, but definitely guidance that is needed for the profession. Amy, you mentioned potential auditing topics a few minutes ago. What else can we expect to see included in later versions of the practice aid?
So we will start off with the acceptance and continuance content, and then we're going to pivot to other foundational topics, audit topics. The first will be risk assessment. Risk assessment underlies everything that we do in an audit. In this case, we'll really focus on identifying and assessing unique risks in the digital assets ecosystem, understanding the entity, understanding fraud risks and schemes, and really thinking about this unique industry that's evolving so quickly. The next batch of content will focus on processes and controls. It's very important in this ecosystem to understand management's processes and controls, including when a portion of their controls is performed by a third-party service organization. This content will focus on what types of controls management may have, and we'll also discuss the concept of when substantive procedures alone are not sufficient to support our overall audit assurance, where we need to rely on controls. The next batch of content will focus on illegal acts and related parties. Here, it's really important to understand the entity's tone and their processes for complying with laws and regulations. We see in the space that laws and regulations are really evolving quickly and changing, and it's important that management have appropriate controls in place to monitor those changes. Auditing related parties is also quite challenging in this space, considering the pseudo-anonymity of a blockchain, and really thinking through how we can get comfortable that transactions are not with related parties. Beyond those foundational topics, we will pivot into more of the audit assertion areas. We'll be focusing on completeness of these digital assets. We'll be focusing on existence and rights and obligations, which I discussed earlier, valuation, presentation disclosure, and then getting quite deep into the IT risks associated with these audits.
Sounds like a lot of really exciting topics, and I personally can't wait to have them roll out and be part of the practice aid. As I said previously, as the topics are finalized and through the review process, they're going to be added to the practice aid. So the practice aid will continue to include all of these topics that Matt and Amy just talked about. Matt, let's change gears for a moment. For someone listening who isn't familiar with this space, what is some advice you could give them that would help them get ready? What is important to know for those starting out?
So as I think about people just starting out and trying to figure out the kind of accounting for digital assets, obviously I always recommend people to start conversations early. So the prayers obviously need to involve all of management. If you have your audit function, internal audit, external audit, regulators, audit committees, standard setters, everybody at the table having a conversation when you're looking at a particular asset or new asset class. It's helpful to start working through the guidance with kind of all of those people on board early. I would say, as it pertains specifically to these items, since we continue to see such a fast-paced evolution as people are trying and experimenting different types of digital assets or new subsets or categories of digital assets come online, I think it's important to step back and not jump to accounting conclusions based on the jargon terms or generic industry classifications that someone might put a particular digital asset into. I think it's very, very important when you're trying to start out thinking about the accounting to understand those underlying rights and obligations that are conveyed by that specific digital asset, and then work that through the guidance that we have today.
Before we wrap up, let's do some signposting. For anyone who'd like to find out more about this topic in general or about this work in particular, Amy, what are some resources that you'd recommend?
Well, the Practice Aid is a great first resource and a free resource. It will be available, or it is available in PDF format at www.aicpa.org/digital assets. If you go to the link, you'll get information regarding digital assets, the Digital Assets Working Group, and the link to the free practice aid. You'll also see a link to other resources from the AICPA on blockchain technology, including some learning courses that are very helpful in this space. Of course, you could also find Matt and myself online on LinkedIn.
Great. Finally, after all of that discussion, I wanted to ask one more question of each of you. What should accounting and finance professionals take away from this conversation? What's the one thing they should be doing next that will help them go beyond disruption? Matt, what are your thoughts?
I think it's helpful to sit down and start with a clear understanding of the basics to blockchain technology and to begin to think about how your accounting or auditing may change or be impacted. As using some of the examples that Amy and I have talked about today, to think about, what types of evidence or what types of accounting questions might come up if all of a sudden the only evidence available is on a blockchain. And then I think you can start to think or develop a roadmap for those items and plug into and start to think about whether it's the application of the accounting or auditing standards or discussing with the regulators or looking at the regulations and starting to think about how the principles that exist in those standards and regulations relate to the new technology.
Amy, what about you?
I think the big takeaway for me is that blockchain's here to stay. It is going to impact financial reporting and internal controls and audits. Management will need to consider new forms of evidence and internal controls to support its books and records. Auditors will need to respond to unique risks and unique forms of evidence and really challenge themselves to develop audit responses to these unique risks. The skill sets needed by preparers and auditors to successfully operate in this space is different, and it is critical that we all work together to develop these skills. This is an exciting area, but one that requires much thought, due care, and working together to determine the best practices of tomorrow.
That sounds like some really great advice. Thank you, Matt Schell and Amy Steele. It was great talking with you. We'll have to leave it there, but as I've said, our show notes will link to all of the digital asset related resources we've just talked about. A quick listener note, you can view those show notes really easily. Just click on this episode's info icon in the podcast app on your smartphone or tablet, or open the episode in your computer's web browser. You'll find everything you need right there. There are 2 other websites I'd recommend that will help you stay ahead of the curve. AICPAstore.com/go beyond disruption and cgmastore.com/go beyond disruption. You can go there for courses, webinars, and other professional development resources. It's really a useful mix of free and paid for resources. Thanks again to our guests, and of course, thank you for listening. If you've enjoyed this episode, go tell someone about it. We'd love to know what you think and what you'd like to hear more of. Email us via the feedback link in our show notes. From our AICPA and CIMA office in Durham, North Carolina, I'm Krupica. We'll be back soon with more conversations that help you and your profession to go beyond disruption. Till next time.
Thanks for listening to this episode of Beyond Disruption, brought to you by the Association of International Certified Professional Accountants. Learn more about today's topic at AICPA-CIMA.com/disruption. This podcast is designed to provide illustrative information with respect to the subject matter covered and does not represent an official opinion or position of the Association of International Certified Professional Accountants or any of its subsidiaries or affiliates. It is provided with the understanding that the association, its affiliates, and subsidiaries are not engaged in rendering legal, accounting, or other professional services. If such advice or expert assistance is required, the services of a competent professional person should be sought. The association, its subsidiaries, and affiliates make no representations, warranties, or guarantees as to and assume no responsibility for the content or application of the material contained herein and expressly disclaim all liability for such damages arising out of the use of, reference to, or reliance on such material.